Who do you think is the right person who should absolutely take the plunge towards entrepreneurship? How do you really decide that you are ready to take that plunge?
Before you start, you must evaluate what is the market opportunity. Do you have the passion towards building towards that opportunity, and you have the skill? It takes you nothing less than 2 years to get to a point where you can start drawing a decent amount of money from the business to actually sustain your lifestyle.
How do you spot that this is the space that I should be really tapping onto for my business?
Just look at economies which are further ahead of India in terms of their consumption story, and I would say the US is a fabulous example. Today, if you walk into any grocery store in the US, the gummies, mushroom gummies, which have functional benefits, to help you focus better, to help you sleep better, to help your gut work better towards your overall health.
I have some amount of savings with me. Should I use all of that saving, put that into my business to start off? Should I take the help of my family or friends to support me in my initial journey? Or should I absolutely go to the bank? Or should I look for an investor? How do you advise absolute startup people who are just starting at the very start?
To be able to get into entrepreneurship. I mean, so maybe if it'll take you about 10 lakhs to comfortably live your life for the next 12 months, and your business would take another 20-30 lakhs to sustain. You should have that kind of 40-50 lakhs worth of savings to be able to reasonably take that bet.
Are you somebody who's been thinking of becoming an entrepreneur or have an own startup? Or maybe are you somebody who has some business idea but does not know where to start? Well, I must say that you're at the right place. Hello and welcome. You're watching Booked. I'm Sakshi Batra, and my guest today knows this world inside out. Let's welcome Sarthak Ahuja, who's an investment banker and has over a decade of experience in startup advisory, and he's helped countless startup founders to shape their ideas and also to raise capital. And today we're going to be talking about his latest book, The Moneyball, which truly is a guide to creating your business ideas, crafting them, and also for fundraising as well. So truly, welcome Sarthak, and thank you so much for taking the time.
Thank you, Sakshi.
Well, let's start off with the basic. I know a lot of our viewers are really interested. There is some or the other point in everybody's life when they think that should they take that leap from becoming a salaried employee to maybe having a startup of their own. But I want to ask you, who do you think is the right person who should absolutely take the plunge towards entrepreneurship? How do you really decide that you are ready to take that plunge?
Well, I think there is definitely a framework which says before you start, you must evaluate what is the market opportunity. Do you have the passion towards building towards that opportunity, and you have the skill? Because if there is an opportunity, you have the passion, but you don't have the skill, your competition will beat you. There is an opportunity, you have the skill, but you don't have the passion, you will feel burnt out, a little sooner than everyone else.
Okay.
And you have the passion, you have the skill, but there is no market opportunity or need or customer willingness to pay. Then of course you won't really be able to make money, and it won't be a profitable entrepreneurial venture. So I think these three things, passion, opportunity, skill, have to come together and that's what we call market timing, right?
Yeah.
That's necessary. But apart from that, I think the toughest part that a lot of people don't realize is that it takes you nothing less than 2 years to get to a point where you can start drawing a decent amount of money from the business to actually sustain your lifestyle.
Okay.
And that 2-year period or 24 months is tough when you get really bothered by people asking you what is it that you're doing and you don't have an answer.
Exactly.
So I think you have to be really thick-skinned to be very self-assured to know if you're building something and whether something good happens out of it or not. Would you be proud of having taken that leap of faith on yourself? I think that bit of self-assuredness is really important.
So at least 24 months of your business not drawing you anything, you should be okay with it and have an eye on the long-term goal. But like you said, timing. Why do you think even today the time is absolutely right for a lot of people to start their entrepreneurial journey. Startups have been now there in existence for far too long. There was once a time in startup unicorns, these were just buzzwords, but nowadays you have everybody around you who's into this world already. There are so many businesses that are already done and dusted. So two things there. Why do you think the timing is right that one can still take that plunge? And two, when there are so many businesses that are already there and you feel that there is no scope, how do you really get into it?
Great question. I mean, I would say when you look at India and speaking in the context of India, 60% of our GDP is actually consumption driven. And 75% of this consumption is actually absolute basics. It's just 25% of this consumption which is discretionary in nature.
Okay.
However, India right now is almost at a $3,000 per capita income. And what we've seen with other economies like Indonesia, like what happened with China and several other countries is the moment per capita GDP crosses this $3,000 benchmark, suddenly discretionary spend absolutely takes off. And I think India is kind of at that inflection point where you have so many people buying iPhones, even though it may seem like, 70% of these people are buying it on EMIs.
That's true.
And spending 4 months of salary just getting an iPhone. Why? Because of social media. Even status signaling is becoming important to people, which is why I think building a consumer brand in India today is such an opportunity where we'll see a lot of fans, a lot of communities coming together and saying, this is the brand that I relate to.
Yeah.
And which is why using this signifies what kind of person I am, and it signals a bit of identity.
Okay, so one thing that's clear is that India's consumption story has a lot more to go, and therefore, in case you are looking to build something which really caters to the consumption angle, is something that you can definitely be focused towards, and this will definitely reap you benefits. Another aspect that I want to ask you is that what is more important? Should you have a unique business idea, or should you have a skill that can better all the existing businesses that there have been? What is more, according to you?
In the same vein as discussing about consumption and building a D2C brand, so to say.
Yeah.
For India, as they often say, first-time founders obsess over product, second-time founders obsess over distribution. And I think distribution today has become so much more important. You could make the absolute best product in the world.
Yeah.
But if the consumers don't get to experience it, see it, be able to buy it immediately whenever they want, your product is bound to fail. Which is why I think, a lot of people tend to joke that creators today want to become entrepreneurs and entrepreneurs today want to become creators.
Yes.
And I think it's because entrepreneurs have realized that digital media or social media is where they need to be if they need to sell their product.
Right.
And creators have realized that is one way for us to monetize our reach is to have a business. So I think both of these things are going to be coming together. And if you feel you as a person are a product expert, I think it makes a lot of sense to have a co-founder who's a marketing expert and can actually build the distribution. And only when you have these two skills coming together does a business's chances of really taking off skyrocket.
So tell me, how do you spot business opportunities? One you said is, of course, looking at, where the money flow is going to go. India has a lot of large customer base. They have aspirations and they are now aware they're willing to spend. The per capita income is higher than lot before. So one is consumption. What are the other? How do you spot that this is the space that I should be really tapping onto for my business?
Yeah, I think essentially what we're looking for are arbitrage opportunities where you get a product somewhere and you could take it to a place where it's not available and sell it and make a margin while doing it. So I would say one easy way to look at arbitrage opportunities is just look at economies which are further ahead of India in terms of their consumption story. And I would say the US is a fabulous example. Today, if you walk into any grocery store in the US, the gummies, mushroom gummies, which have functional benefits, to help you focus better, to help you sleep better, to help your gut work better towards your overall health. CBD sodas, which calm you. There is anti-anxiety jewelry, which is becoming really popular in the US, where there are almost fidgety beads onto your rings that you can fidget along with, and you can feel a lot calmer. So I think if you were to just evaluate what is it that consumers in the US have been buying for the past 2-3 years, and India would take, say, 5 years or whatever is popular in US to come to India for people to spend onto it, I think that is where you spot opportunities. And a great arbitrage today also exists for the fact that India does not have access to TikTok, which is why if using AI models today and on chatbots, you could just type what are the most trending products selling on TikTok in the month of October 2025
Okay.
in, say, beauty and personal care. AI chatbots would actually look at TikTok, would look at reports which have done this analysis and give you the answer. And once you start spotting it, I think you'll see so many products that you may feel maybe in the next 12 months, 24 months would be right to launch in the Indian market.
Wow.
I'll give you another insight. You could, and I ask all entrepreneurs to do this, just take that bet on yourself and actually go to China. Go to the Canton Fair that happens twice a year in October, in April. Look at products in the category that you want to build in. And just the sheer amount of innovation that is happening there will open your minds to say, okay, this is something I can first import, trade a little, test the market, and once there is good PMF or product market fit, maybe I could manufacture this in India or assemble this in India and then launch my own brand.
That's wonderful.
I think just these three ways are enough to give you so much on what you can build.
Okay. Another aspect would be, there are various segments in which your business can come in. Either you can be a manufacturing based company, you can be a services company, you can be a trading company. So how do you identify, which segment should you really look at?
Okay, I'd say if you are a knowledge professional and you've been working with a company, a great way for you to diversify your income and maybe get into entrepreneurship is to probably try freelancing. It's the lowest hanging fruit, lowest stakes, because apart from your time, you're not really putting capital in goods. So it's a good way for you to see if you can build a service-based business and then build products on top of it. Now, there is a framework with which I like to think of what is better or what comes first, trading, manufacturing, or building a brand. And I would say traders typically make money on arbitrage, and you would not get a window or an opportunity which is longer than 12 months to actually monetize on that arbitrage, because if it starts selling in the market, a lot more competition will come in and drive away the margin. So a lot of traders should think from the next 9 to 12 month perspective, what can they identify, spot and make money. Manufacturing, typically, when you make a spend, you should be able to recover your capex from the profits in about 4 years at best.
Okay.
So that's more like a middle term focus where you say in 4 years, can I recover my cost?
Got it.
So the stakes are much higher. But building a brand is the easiest today because we've got Shopify, you can set up a website, you can set up an Instagram page, you can source some products, print packaging, make it nice and good looking. But to really build a brand and build loyalties actually is the longest thing, and it takes nothing less than 12 to 15 years according to me.
Wow.
So the stakes to start a D2C brand are actually very low, where a lot of people are getting into it. But how many of them will really be able to sustain the next 15 years is the bigger question.
Absolutely. When it comes to startups, I think the biggest challenge that a lot of people who are just starting out face is funding. There are lots of challenges and we'll come to each one of those. But for somebody who's starting at a very small scale, the question would be that, okay, I have some amount of savings with me. Should I use all of that saving, put that into my business to start off? Should I take the help of my family or friends to support me in my initial journey? Or should I absolutely go to the bank? Or should I look for an investor? How do you advise absolute startup people who are just starting at the very start?
I think when you're starting at the very beginning, there is a very slim chance the banks will fund you because they need substantial history of profitability, because they do very safe investing in the form of debt. I think you should have at least about 9 to 12 months of your own runway, apart from all your business, of all your lifestyle expenses worth of savings for at least the next 1 year.
Okay.
To be able to get into entrepreneurship. I mean, so maybe if it'll take you about 10 lakhs to comfortably live your life for the next 12 months, and your business would take another 20, 30 lakhs to sustain, you should have that kind of 40, 50 lakhs worth of savings to be able to reasonably take that bet. And thereafter, I think the government schemes, the Startup India scheme, a lot of the grants that the government give are actually, I still feel, very untapped because people just don't know how to apply.
Okay.
And when I say how to apply, I'm not really talking about which website to go to or which form to fill up.
Right.
I think a bigger question is that when you apply for these schemes, the government asks you to pick 3 incubators. And most people end up picking incubators that they've heard of, which are the most popular. So it's almost like thousands of people applying to the same incubators, which have dried up the money available for them to fund.
Got it.
And thousands of other incubators who have funds available but are barely getting any application.
Okay.
So I would say it makes sense for you to do a right to information, make an RTI to Startup India, and they give you data of which incubator in India has which industry specific sector focus and how much money is left undeployed. And
That's
that way
wonderful.
your bets of really getting money increase because you're taking a more educated bet while making the application.
That's a great tip, because I think there is a lot of misconception, I think, among people that, these government schemes are there, but hardly anybody really gets funded from these schemes. So maybe there is this mistake that a lot of people are
100%.
doing at this point in time. So that's a great tip. So in case you've been looking at government funding for your startup, that's one tip that you must definitely follow. Look at the incubators, file an RTI, and find out where exactly should you be targeting for your funding. Now, help me understand when it comes to the investors beyond the government schemes as well. What is one hack that you can, employ to reach out to the investors that you want to?
Yeah, so I think investors at the early stages when you're just getting started are essentially wanting to back on the team or the founder, the traction and the timing of the market. And when I say that, what you really need to prove is that India or consumers in India are going through this immediate change, and this is a white space or a gap which no competitor or no player in this one sector is catering to.
Okay.
So you first, as a first step, make them understand the need or the gap in the market. Then comes the part where you really need to show why you are the best suited to solve this problem, which is why a lot of founders who've actually made it to IITs, IIMs, the McKinseys actually have an edge, because even in the VC or investor community, they have a lot of alums who would like to take a bet on people who they know
Yes.
belong to their alma mater,
Yes.
because they know it comes with a certain amount of metal and hard work to be able to make it to those institutions. And if you don't have that, you don't need to lose hope, because having worked in a particular industry for a very long time, you can actually build your credentials and show why you are best suited because of your experience in that industry. Once that is sorted, the third step is what initial traction have you been able to develop?
Yeah.
And I would say in today's day and age, while it varies across segments, I would say doing 20 lakhs per month of recurring revenue is something you should be able to achieve in a bootstrapped fashion.
Okay.
Once you are at about 20-30 lakhs of bootstrapped monthly recurring revenue, you could have a lot of pre-seed investors wanting to take a bet on you, and you should be able to raise close to 1-2 crores just to be able to scale your business to another level, maybe hire an initial team. And most marquee VCs, I would say the likes of Nexus Venture Partners and Peak 15 and Z47, would all take you seriously, I think, somewhere around when you are at about 2 to 3 crores of monthly recurring revenue. That's when it may be much easier for you to raise a $2 million check or somewhere close to 16 to 18 crores from a marquee VC like that.
Got that.
And there are enough in many bootstrap startups doing anywhere up to 10 to 15 crores of revenue today, all bootstrapped without any external capital. So one shouldn't think it's not possible without external money.
Sure. So one aspect is what you've talked about is how do you continue to have consistent revenues in either formats. What other things does an investor really look for when they want to fund a startup? And what's the difference between a good idea and a fundable idea for a startup?
Wonderful. So I think different investors have a very different perspective on how they evaluate deals. But for a founder to understand this, what they must look at is that even if an investor puts money in the index, say the Nifty 50,
Yeah.
they would over a long period of time expect somewhere close to 12% per annum.
Absolutely.
Yeah, which means essentially their money is doubling in 6 years. So if you can show that your business will continue to double their money in a period of about 3 to 4 years and no more, that is where it becomes investable.
Ah.
Then comes the question of that venture capital investors are actually very high risk investors, and they're essentially looking for opportunities which will not, double the money in about 4 years. What they're really looking for is, can you 20 times my money and give me 20 times the capital appreciation within the next 6 to 8 years. So I think first step, your business should have the ability to scale to that level for investors such as venture capitalists to actually be interested. But when we speak about angel investors, a lot of angels are essentially just looking at how quickly can I flip. So if you can give them a story of doubling in 3 years, I think it will work with angel investors.
Okay.
A lot of angel investors today, or strategic investors who have distribution in their own business, which they can unlock for you in addition to the money that they offer, may actually like a royalty of 2 to 3%, because they know even if you don't really have an outsized outcome, that royalty gives them the opportunity to recover their money over a period of 3 to 4 years, and then whatever equity they get is almost like an upside on top of them just having recovered the money.
Fantastic.
Private equity guys, which I would hope would come say 2 to 3 years prior to when your business would plan an IPO,
Yeah.
are essentially looking at, can you double your valuation within the next 2 to 3 years when we go to IPO?
Got
So I think looking at how quickly can you double their valuation is an easy benchmark to see what they want.
Another question that a lot of startup founders would have is that does your business need to be profitable to gain access to such investment?
Great question. And I think a lot of people actually slam entrepreneurs who are on Shark Tank India, saying
Yes.
that, their businesses are not profitable, but they ask for others to be profitable. And I think what they don't understand is that there is a method to measuring profitability. So after you remove GST from your revenue, you really get net revenue.
Yes.
You remove the cost of goods sold and you get the gross margin. Then you remove the packaging, logistics, delivery costs, and you get a contribution margin 1 or a CM1. Thereafter, you remove the ad spend and the branding spend or the customer acquisition cost, and you get contribution margin 2 or CM2. Now the business has to be CM2 profitable. Thereafter, you could be spending money on a head office. You could be spending on hiring people, building a head office for scale in the future. So, which is why absolutely at the end in the P&L, even though you're loss making, that could be okay, because investors would think our money is going into building infrastructure which will reap benefits in the future. But CM2 level profitability is an absolute must for any investor to want to bet money on you.
What is CM2?
Contribution margin 2, which is you removing the cost, you removing the GST, the cost of goods, the cost of packaging, delivery, and the cost of ads. Once you remove this from your sale or revenue figure, and if you're still profitable, that's the kind of profit investors want.
Okay, that's wonderful. So need not that you have your bottom line always showing in the black. That's something that you can be now assured of in case you have all these parameters to prove to the investors at large that you're still an investable and a fundable idea at that stage. How does somebody convince themselves that, okay, I have this business idea, but it is worth my time and my money? You said 24 months. Somebody may take it even longer. But how does one convince oneself that, yes, this is something that is going to work?
I think I always think of it as, a lot of times I've seen entrepreneurs who want to read the next book or do the next course or speak to one more person before they can really take the bet on themselves. And what I've seen is they get into analysis paralysis, where they're just reading the reports and speaking with so many people and are unable to just jump and get into it, because real entrepreneurship starts when you get into it and you start building. So I think if you are someone who's afraid of public judgment, if you have an environment or family which would not let you build in peace and will put the pressure on you to actually bring in monthly cash flows to sustain the family, and your self-worth is linked to it, maybe you're better off not to get into entrepreneurship and work on rising up the corporate ladder, and you would be happier and your family would be happier. So I wouldn't say entrepreneurship is for everyone. You must know whether you have the right mindset to be able to take it. And there is while there is a lot of glory in entrepreneurship, there is also no glory in entrepreneurship if it's not something you want to go after and find what gives you happiness. Because at the end of the day, we're not optimizing for revenues, we're not optimizing for valuation, we're not optimizing for profits. What we're really optimizing for is joy and family relationships and having a life that we've lived well.
Absolutely. So that's a brilliant thought. But how do you advise somebody who's actually failed at having had a startup and is not able to just take the next step or jump back into it? You must have had so many experiences with startup founders not having made it in the first go. How do you deal with failures?
I think when I look at it statistically, the biggest reason why startup ideas fail is because of co-founder conflict.
Okay.
And a lot of times, I think people who enter into business with others a little too early before having really worked with someone over a long period of time and understood working styles and having understood the vision. So a lot of times, I think early entrepreneurs who don't have too much experience get excited by the idea of someone else also wanting to build. So how misery loves company, two people come together and then they make a bigger mockery out of it because they've not really had time and experience working with each other. So I would say if you're really looking for a co-founder, maybe work with someone on a project basis over a 12-month period. Really test out whether your working styles align, your skills are, they come together, they're complementary, you're not stepping on each other's toes. You can really work without offending the other person and genuinely take feedback. And once you think you've got a good enough co-founder, take the plunge, take that bet. And I think the second big mistake people make is they obsess over the product and not as much over the distribution. So maybe a great starting point for people could be, instead of jumping into entrepreneurship along with your job or your full-time work, maybe just start doing some bit of content and testing consumer feedback online. And consumers in your DMs on social media, in your comments on social media, will actually validate your ideas of whether there is an actual gap in the market for a product or not. And that consumer validation can probably soften the blow for you and maybe tell you what is the right time to launch.
Absolutely. If I have to ask you, everybody is talking about how India is into its Amrit Kal, next decade is going to be India's, and there's so many more opportunities that are going to be coming in. For somebody who may be just looking at an opportunity over the next 25 years to build a startup, which are the sectors or categories that you believe they have immense opportunity in India to grow?
Oh, so I would say, because we were speaking about consumer, if I look at consumer, and you look at the Invest India data, one of the highest growth rates leading up to 2030 is actually in apparel and fashion. And a lot of people tend to think that it is so saturated and so many people are building in apparel and fashion. But I'll give you a simple example. When you look at data of what kind of jewelry is actually trending in the US, I was looking at this data just about 2 days ago, which said there is a new kind of ring called the Moss Agate ring, which has become really popular in the US. And that's happening because there is no visual distinction that you can make between diamonds and lab-grown diamonds. Which is why now people are looking for what are these unique stones which cannot be made in the lab, which are now becoming new status symbols. So, there is still a lot that can happen in fashion, in jewelry. Footwear is going through an absolute boom in India right now, as are fragrances. And you would think there are so many people doing fragrances, but most startups that are building in fragrances in India today are essentially making dupes or fragrances very similar to popularly known fragrances. But I think if someone could work on indigenous fragrances, have a story around these fragrances, quite like Oud Arabia is a brand which only makes very Middle Eastern kind of fragrances. So if someone could have very Indian fragrances and have a story around it, I think it's a massive category. A lot more players will come in. But if you are someone who understands tech, I would say go for AI, go for biotechnology, go for crypto and blockchain, which is going to come back for the simple reason that the US government is now, with its Genius Act, validated stable coins. So I think we'll see a lot of building happening in blockchain. Drones and robotics, if you don't understand it much, just go to China, pick up simple machines. For example, there are machines that you can buy for as little as 10-15,000, which you can plug onto a socket and put on all these glass panels and windows and doors in offices, in homes, and the machine cleans it. I mean, it's
Wow.
when you go to hotels and there are those placards or little boards that say from 9 a.m. to 12 noon, there will be cleaning service on the windows. So maybe you could decide to shut your curtains. I think it's ridiculous. Why do we still have people hanging on the facades and cleaning it, where you can practically just get a machine to do it for you, right?
Okay.
And I think drones and robotics are simple machines which don't exist in India.
Right.
I think massive need for coffee machines within 15,000 that people could have, quite like the microwave, in their homes.
Yes.
Wildly under-penetrated category.
Wow, these are some great ideas. I'm sure everybody is noting all of these down and starting to work on them already. What about export opportunities or import opportunities at the same time? We are already looking at a very uncertain world right now. Policies are getting changed for a lot of exports, imports. So there will be more countries that will be open to it, more trade policies that will be formed. So how would you look at that?
Yeah, I would think the time is really right now, quite like K-pop blew up in the past 5 years. I think the time for I-pop or India pop is right here, where people are genuinely looking up to Indian products. And it's no longer about yoga or ashwagandha or even something like Isabgol. I think if someone could make Isabgol tablets which are chewable for gut health, it's a big Indian product.
Yes.
Which requires a lot of education in the foreign markets. I think it's the right time for someone to start that. Yoga is more for mobility, flexibility, a little bit of cardio. But when you think about it, there are these Indian mace. There is the Indian mace, which is used in akhadas of India for strength training. And there are now gyms in the US and in the UK where they want to strength train people using just a mace.
Wow.
And I think you can make it look very cool, almost like a baseball bat, and start with classes on doing strength training using the Indian mace.
Wow.
And I think that is an opportunity to really blow up.
Wow, wonderful. Towards the end, Sarthak, this conversation could have gone on and on, but towards the end for this one, and there'll be many more conversations to follow, if there was one line from your book, The Moneyball, that you want all the startup founders or entrepreneurs to remember, what would that line be?
I would think your biggest determinant of success is really the market you decide to get into, because markets are like rivers. You could have two rivers. One is a canal, the other is the Ganges. And Michael Phelps jumps into a canal. But you, who just knows how to swim, jumps into the Ganges. Who will win? It'll be you. And you will be able to beat Michael Phelps. Not because you're better skilled than him, but because you're in a market which is growing much faster. So I think just a little bit of analysis on consumer insight and really wanting to ride a wave is a lot more important, because entrepreneurship is about timing the market and getting it right.
Fantastic. Well, an absolute pleasure, Sarthak, for having you here. And thank you so much for sharing such wonderful tips. I'm sure a lot of our viewers would have at least got inspired in case they had somewhere in the back of their mind that they have to take the plunge here. You would have definitely helped them out with this conversation. Many thanks, and all the best for this book. May it become another bestseller of yours. And thank you so much for speaking to us on Booked.
Thank you.
Thank you so much.